Now, yesterday, we looked at the course outline, which we looked at money and its evolution. We looked at fiat money. We looked at cryptocurrency. We looked at blockchain. We looked at Bitcoin, crypto exchanges, wallets, and then we had some question and answer series. Now, for today, which is day 2 of this class, we're going to look at trading actually. Yesterday, we talked about crypto exchanges as the place that connects the buyers and the sellers together. Crypto exchanges as the place that makes the buying of crypto possible. Now, we are going to look at how to use these crypto exchanges. But before that, we will talk about Blockchain Explorer, because I mentioned the blockchain is the fountain from which Bitcoin and other cryptocurrency comes out of. Now we have something called the Blockchain Explorer, and it's very, very important to understand how to navigate the Blockchain Explorer so that you can easily, use and explore the transparency of the blockchain. I told you one of the core features of the blockchain is that it is very transparent. That is one big thing that makes it stand out compared to the traditional financial system. So we are going to look at the Blockchain Explorer and we are going to do some practical. Now we're going to talk about what is trading, KYC, which is know your customer. I'm going to talk about how to use a crypto exchange, the types of orders on crypto exchanges. You will explain it in details. This can be applied to any exchange. Like I said, whatever thing you are taught here can be applied. Is general knowledge, but we are being specific because we're using a particular exchange. So ensure you go through the description of this class. If you've not signed up using Bybit, using that link in that description, ensure you create an account on Bybit Exchange using the link in the description and you get a $30 bonus. Meanwhile, if you've not subscribed to the channel, ensure you subscribe to the channel and like this video, like this live stream. Do not forget to like, as it gives us more reach. It gives us more exposure. So ensure you like this video. Give us a thumbs up and subscribe to the channel if you haven't. So going further, we're going to look at sports trading. We'll talk about features and P2P. And if there is time, we're going to do some practicals, then take some questions and answers. So going right ahead, we're going into day two's business, which is what you are seeing on your screen as the course outline. Now, let me make this full screen so you can actually view it clearly. All right. Now, if you are not seeing this screen very well, if the quality of what you are seeing is kind of blurry, what you should do, if you are watching this straight from YouTube, click on the three dots icon at the top right. When you click on the three dot icon, that is the menu icon, that is the three dots. When you click the menu icon, click the wheel icon that shows up in the list of menu there. That is the settings that controls the quality of your video stream. When you click that settings icon from the menu, you click the settings, that thing that looks like a wheel. You will now change it from, it's going to be 240 if you're not seeing it clearly. Change it to 720p. 720p is the highest, and then you see everything clearly. You get the highest resolution. So do not forget, if you are watching this video at any time and it's not clear, what you are seeing on your screen is not very clear, click on the menu, which is the three dots at the top right corner of your screen. Then click the out of the options that are given to you. There is one that is called settings there. That's a wheel icon. When you tap on it, you now change it to 720. I hope it is clear. So let us proceed. Now, we're going to talk about Blockchain Explorer. So what is Blockchain Explorer? Many people have been hearing of this Explorer thing. What is it really? Now, a Blockchain Explorer is a browser for the blockchain. Do you understand? In simple words, a Blockchain Explorer is a browser for the blockchain. So it allows you to explore the entire blockchain of the crypto coin you are using. Now, you know what is a browser? Browser are things like Chrome, Mozilla Firefox, you have Kiwi browser, things like that. What do you do with a browser? With a browser, you can access any form of information or data you need. Now, the Explorer on the blockchain is the browser of the blockchain network. And as I mentioned to you yesterday, we have various blockchains. We have the BNB blockchain, we have the Binance Smart Chain, which is a blockchain. We have the Ethereum blockchain, we have the Bitcoin Omni blockchain. Each of these blockchains, have their own explorers. So on these explorers, you can get access to all information that is contained in that particular coin's blockchain. So As I mentioned, all cryptocurrencies and altcoins have their own blockchain explorers on which you can track their transactions. But one thing you should have at the back of your mind is this: you cannot use the blockchain explorer for different coin on another coin. For instance, you can't use the blockchain explorer for Litecoin transactions on a Bitcoin explorer. You can't get a Litecoin address and try to access the details on a Bitcoin blockchain explorer. It's not going to work. So you must ensure that the explorer you're using is the accurate explorer for that token. Do you understand? So if you are checking for Binance Smart Chain, ensure you have an address that is configured for Binance Smart Chain. If you are checking Litecoin, Explorer, ensure that the address with which you are checking on the Litecoin Explorer to see how transparent things are is actually an address that is configured to be Litecoin wallet address. Do you understand? So in essence, what I'm saying is most of the explorers are not interoperable. They are not interoperable normally. So you may have something on the Ethereum blockchain, you can't find it in Polygon. If you are seeing it on Polygon, it means that that thing is on Polygon blockchain directly, not Ethereum. So the explorers are not interoperable. So ensure that you are very specific when making do of this. In summary, again, the blockchain explorer is like a browser, and this browser is like a window that allows you to see things as they happen real time. I mentioned this yesterday, that transactions or things or information you see on the blockchain explorer are actually things that happen real time. They are data that happen real time. So if I send you a transaction, immediately I send it, all you basically need to do is visit the blockchain explorer and you get the information real time. Now, what are the things you can do with a blockchain explorer? Now, with a blockchain explorer, you get to view a lot of information. There are lots of information that you can see on the blockchain explorer. Now, some of those information, let's use a Bitcoin block explorer as a case study. So what are some of the information that you can get with a Bitcoin block explorer? One of them is called the blocks feed. Blocks feed. Now, what is blocks feed? This allows you to explore recently mined blocks and provides you a live feed of all the blocks that are being added to the blockchain in real time. New Bitcoin blocks are created every 10 minutes. I mentioned this yesterday. Now, I told you why it is called blockchain. In simple words, it's that it is a chain of blocks. There is a chain connecting blocks. They're the first chain in the blockchain. I told you the name yesterday. Can somebody quickly mention that in the comment section? Let me see if you can remember. What is the first chain in a blockchain called? The first block, rather, the first block, not the first chain. The first block in a blockchain. I told you the name. What is the name of the first block in a blockchain called? Quickly mention that in the comment section if you have an idea. What is the first block in a blockchain called? I mentioned that yesterday. I'm looking at the comment section. What is the first block in a blockchain called? Correct. Oh, I've seen around 12 responses. Okay, the first person that got it was Chijoke David. Genesis block. Yes, Sammy Fee, Harry Anthony. Every person got it. Exactly. You people are very brilliant students. This is awesome. It shows that you are following and you are actually understanding. So the first block in a blockchain is called the Genesis block. That is the first block that is ever created. Bitcoin's Genesis block was, created in 2009. That is when Bitcoin was launched. Immediately the token is launched. That is when it starts counting. So every 10 minutes, a new block is added. So when we talk about the blocks field, the blocks feed is what allows you to explore recently mined blocks. I told you blocks contain information. That is what is contained inside a block. Each of these blocks in the blockchain contains information, contains data, and mostly they are transactions, about deposits, withdrawal, transfers between wallets, and all these are information. So each of these information are put in blocks. So with the blockchain explorer, you can access the data contained in a block. Now you can also view transactions feed rather. It allows you to explore any transaction in any block that has already been mined and is currently added to the blockchain explorer. This is just similar to what I've mentioned. So with this, you can access every form of transaction that is already mined. Obviously, you are talking about already mined transactions, so you can even backtrack them. What I mean is, I send you fund, you now copy, you don't track that transaction. You can even equally track where the fund that I sent to you from my own wallet, where is that fund coming from? That is the wallet that sent it to my own wallet, the wallet that sent it to the wallet that sent to my, that way, all these blocks have already been present in the blockchain. So with the Explorer, you can even backtrack and get all the information and data you need. It also allows you to view transaction history of a given address. This is exactly what I'm saying. So using a Bitcoin blockchain Explorer, you can check the history of any public Bitcoin address. Take note of the keyword public Bitcoin address. That is what we call public key. When you hear the word public key, it's just your wallet address. Do not get confused. Public key and private key are not the same. Private key, like I mentioned yesterday, is what you get on non-custodial wallets when you sign up on them. But the public private key rather is what you get on non-custodial wallet. That is your seed phrase. But the public key is just your wallet address. So nobody can actually hack your account with your public key. So anybody that has access to your public key can actually track it on the blockchain Explorer, see all the transactions that have been done previously. So you can see how many transactions it has received. You can even see its current balance. This is the transparency of the blockchain that I mentioned yesterday. Imagine, all our current leaders in Nigeria right now, with the current financial system, you cannot know how much each of these guys have. When money is coming into the accounts, you can't know, except they tell you. And they can also tell you figures which are not accurate. There may be some money which they are hiding. You may not know. But with the blockchain, all these things are transparent. You don't even need their permission to access it. Once you have the wallet address, you can access all transactions that have been done. So there is no way somebody has taken out money and the person is saying he didn't take. You take out money, you didn't steal money. But on the blockchain, you can easily access this. We're going to practice this real time so you can see how it is done. You can also, using a blockchain explorer, you can see the receiving and sending address in a transaction. These are mentioned. So you can see the receiving address in a transaction. Now, we can also see what is called mempool. Now, one thing you must understand about the blockchain is that we have what is called confirmed and unconfirmed transactions. When you send fund, let me use the instance of remittance. When you send money from, say, Trust Wallet, I believe you all know what is Trust Wallet here. So if you send money from Trust Wallet to Bybit, say you want to deposit to your Bybit account or Binance or whichever exchange, when you send fund from Binance, from your Trust Wallet to whichever exchange you want to use, the thing passes through a process called block confirmation. As I told you, it's you can view the blockchain as though you are building a house. Do you understand? As though you are building a house. Now, you first of all mold these blocks, right? You mold the blocks before you now add them to the existing block, add cement, put the next block, add cement, put the next block. That is how the blockchain is. Now, the confirmation means that you are molding the block. See it that way, as molding the block. When it is now confirmed, do you understand? When it is now confirmed means you've now placed that block along with other blocks. Then you now add the next segment, pick the next unconfirmed block, add it to the already confirmed blocks. You now move to the next. That is how the confirmation thing works. So as each block is being added every 10 minutes using Bitcoin as case study, as each block is being added to the Bitcoin blockchain every 10 minutes, is just moving from a status of unconfirmed towards confirmed. So the very first stage, any transaction you do at its first instance is unconfirmed. The next stage of it is going to be confirmed, and this confirmation is done by the miners. I told you we're going to talk about Bitcoin mining and other things in one of the days of this class. So understand that when you make any transaction, it moves from a stage of unconfirmed to confirmed. Now there's something we call mempool. That thing you are seeing on the slide right now, mempool. This I've just highlighted it. Now, the mempool is just a place where all the unconfirmed transactions stay and wait. Then the miner then picks any of the blocks that that meets their target criteria and add to the blockchain. It's just like where you have all the cements, all the blocks that are not yet added to your building. That is how the mempool is like. So it's a place that contains all the unconfirmed transactions. So every 10 minutes, a new block is picked from the mempool and added to the existing blocks. So it moves from the unconfirmed status to the confirmed status. So that is what the mempool is. So with the mempool, you can actually view, with the blockchain explorer, you can actually view the mempool. Do you understand? So you can see the status of the mempool. You find a total number of unconfirmed transactions along with their details. You can even view the details even as they are not confirmed. Now let's talk about specific blockchain explorers. What are the common blockchain explorers that we've got? Now, as mentioned earlier, you cannot use a block explorer in checking a coin. You cannot use a blockchain explorer in checking a coin on the blockchain it wasn't meant for. As I gave you an instance, you can't use a Litecoin transaction. So you cannot use a you cannot use a block explorer in checking a coin that it wasn't meant for. So some of the common blockchain explorers are etherscan.io. These are websites that you can visit. Now for Etherscan, it's a blockchain explorer meant for pure projects that are built on the Ethereum blockchain. So any token that is built on the Ethereum blockchain, where you visit to check the details is Etherscan. Then bscscan.com is the blockchain explorer meant for projects that are built on the Binance Smart Chain. We have the tronscan.org, is a blockchain explorer meant for projects that are built on the Tron blockchain. We have Blockfolio. This one is basically a Bitcoin explorer and is a multi-block blockchain explorer. Actually, when I mean multi-blockchain, there are some blockchain explorers that are built to contain as many chains as possible. Do you understand? So if you visit Blockfolio for instance, you can access Bitcoin. That's the major Bitcoin wallet address transactions, not Bitcoin on Ethereum, not Bitcoin on BSC, but actually Omni. We have the main Bitcoin chain called Omni. So you can actually access Bitcoin main transaction and other sub chains that it supports there. Now we have the main blockchain wallet. This is the one that people actually get confused. When you talk about blockchain, most people actually just think about the app called blockchain. I think that's what somebody even mentioned to me towards the beginning of this course. When I told him, do you know what blockchain is? You know, all that I heard was blockchain is another app. Okay, how it really happened, let me share it before we go ahead. This person actually told me that I asked him, why are you not serious with crypto? Why are you not learning crypto? He said, but I'm not yet 18. I said, who told you you must be 18 to use crypto or to get into crypto? This person mentioned, but I tried to sign up on blockchain, and blockchain said I'm not 18. So that means I can't use with crypto because we're always talking about blockchain. So most persons tend to misunderstand. Blockchain actually is not the app called blockchain.com. Blockchain is not the app called blockchain.com. That is just a wallet, just like Trust Wallet. Do you understand? It's just a wallet to store your coins. That is what exactly that is what blockchain is, that app. So that app called blockchain.com, they have their own explorer as well. They have their own explorer called blockchain.com. When you visit this site, you are going to see an explorer that is also a multi-blockchain that you can access, especially Bitcoin. Do you understand? So what blockchain explorers are windows that allow you to see things happening on chain as they occur. Now we're going to do a practical right now. Let's practicalize tracking a transaction using its address or transaction hash on the explorer, so that what we are saying actually looks very real to especially those of you that are newbies right here. So I'm going to get an address right now and we're going to try to track it. I think I'll get one of my addresses, my Bitcoin addresses, and we'll try to track it right away. Meanwhile, make sure you follow us on Twitter at official_GIDA if you haven't, and follow us on Facebook at official GIDA. If you're not in our Telegram group yet, join the Telegram group at official GIDA, and on Facebook, join the Facebook group at official GIDA as well. Now I'm going to share we are going to visit this blockchain explorer, say blockchain.com, and then we're going to explain what information we are going to see there. So just a minute, and I will visit this blockchain.com site. All right. So let's visit blockchain.com. Let's visit blockchain.com and then we'll visit their explorer so you can get a hang of what we are saying. Oh wow, they are having NFTs quite soon. Okay, so you tap at the top here. There is Explorer right there. So an Explorer, like I said, is like a browser. So all you basically have to do is click the search icon you see there, just like you do in your Chrome browser. When you go there, you have the search icon. Just type in what you want to search for. So here you can search, as you can see here. You said you can search for transactions, you can search for an address, or you can search for a specific block. What we are interested in right now, let me copy my Bitcoin address. Just a minute. Let me copy my Bitcoin address so we can then use it. All right, it's copied. So you basically paste your wallet address. Don't type it manually, paste it there. So when you paste it there, you basically click on search. Now, like I told you, blockchain.com is a multi-blockchain explorer. So you can see there are two blockchains that have this. This same address can be found on two blockchains. That is one thing you should have at the back of your mind. Your wallet address can actually be on multiple blockchains. So it shouldn't confuse you when you visit a blockchain explorer and you are seeing different chains that have that same wallet address. It's still yours, but on a different chain. So right here, I can locate a Bitcoin wallet address, the main BTC, that is Omni, and then we have Bitcoin Cash. Bitcoin Cash is a fork of BTC. I'm going to talk about that after we do this presentation. Actually, you can also select the specific blockchain you want. If I just need only Bitcoin mainnet, I can choose just Bitcoin mainnet. If I want all blockchains, I can choose all blockchains. So right here, I have two options for Bitcoin and Bitcoin Cash. So I've only dealt with Bitcoin, so I'll simply choose the specific you know chain that I want. So you click on BTC and you can see. So look at the details that you can find about this wallet address. I think this was the first, this is the wallet that I used to buy my first Bitcoin when I got into crypto in 2018. Now look at the details that this can tell us about this address. This is the wallet address. You can copy it by clicking on the clipboard. Now, the number of transactions, make sure you watch what I'm talking about. The number of transactions that this address has ever received is 270 transactions. That is both the inflow, outflow, and everything. The total number of bitcoins that have been received on this address is 22 bitcoins. I have received 22 bitcoins on this wallet address for transactions, and the total amount of bitcoins that are sent out are 22 points. The same amount of money that comes in is what leaves. A total of 22 bitcoins have been used on this wallet address, and then you can view the final balance of this wallet address. Now understand that anybody can actually access this information, and you can see how transparent it is. This is what makes the blockchain house sweet, because you can actually access all transactions. It's very, very transparent. So I cannot tell you that on this wallet address I've done just 150 transactions, but when you visit the Explorer, you can see it is 270. So you can see the transparency is top notch. You can see that I've received 22 bitcoins on this wallet. So if I'm having a transaction with you, and we are having a transaction of 22 bitcoins, you say you've sent the 22, but I tell you I've seen only 10. What do you basically need to do? You basically just come to the Explorer. You don't even need a transaction hash. Get the wallet address of the person, or even you that is sending. When you get the wallet address, basically visit the Explorer and paste the address, and you can see everything. So you can see the number of the transactions in details. You can get all details. For instance, this transaction was done on, I think the last time I used this address was in May of 2020. So as at May 2020, okay, if you tap on the BTC sign, you can get the dollar equivalent as at that time, not today's value. So as at 2nd May 2020, a fee of $49. This is the total. This is the block. Exactly. This is a practical example of what I'm talking about. Now, this wallet address was, received Bitcoin. Okay, this is sending, right? The green means it's being sent to me, it's being received. If you see red, it means it's being sent out of your address. Now this place you are seeing, this is the block. This block contains all these things you are seeing here. This place is the root hash, and then this wallet address is under here. All these wallet addresses are All these wallet addresses are the addresses that are contained in this block that is mined. So this block contains load more inputs. That's 190 remaining. So how many total is in this block? We have 190 remaining. So this will be 191. Oops. Let's see how many transactions this block contains. So this is 190, 191, 192, 193, 194, 195, 196, 197, 198, 199, and 200. So 200 transactions, 200 wallet addresses, 200 transactions were done in this one block. So if I send you coin, if I send you Bitcoin, or I send you Ethereum, like I said, it goes to wait in where the mempool. So the mempool is where all the unconfirmed transactions are situated. Now, it is now moved from the unconfirmed status by the miner to a confirmed status and then added to the rest of the blocks. So that is exactly what happened here with all these wallet addresses. All these wallet addresses did a transaction within this block and they all got added to the mempool. You can see my own wallet address. Out of all this, okay, the price of Bitcoin then was $15,000. Was it? So all these wallet addresses did the same transaction within that one block. So like I told you, a block is mined every 10 minutes. So within the first 10 minutes, after the first transaction was done, from that 10 minutes to the next 10 minutes, that's when all of us did this transaction. So you can see, you can imagine the amount of people that are transacting every 10 minutes. This is over 200 persons that got added to this block. Now, this thing called hash is just like a representation of all our data. Combine everybody in that block. This is like what we refer to the block. When we talk about the block, we're talking about the hash. So the hash is what contains all the transactions that are done within that chain, that specific block. So this is it. You can see everything as it's meant to be. Let me see if there's one. There's so many transactions here. Let me see if there's one that I sent out. Well, the point is you've gotten what I'm talking about. So this is a Bitcoin Explorer. Now let's use the other Bitcoin Explorer, that is Blockfolio. This is using blockchain.com Bitcoin Explorer. So let's look at Blockfolio. Let's look at Blockfolio, their own Bitcoin Explorer. Like I said, there are many explorers out there. There are many explorers out there. So you don't have to limit yourself to anyone. Let's Here's the Explorer. Let's type Blockfolio Explorer. The Explorer is not there. It should be, I suppose, it should be. Okay. Blockfolio actually rebranded to FTX. Let's just search a Bitcoin Explorer outside blockchain.com. Bitcoin explorers are much. You can visit, just search the keyword and you get them. Okay, look at this. This is Block Cipher. This is a Bitcoin block explorer. So let's access this as well. All you basically need to do, like I said, is a Bitcoin Explorer is like a browser. So you basically just type in what you want. But in this case, you don't type. You basically paste what you've copied. And then you hit the search button. And we are going to see the same exact information we saw on the previous blockchain explorer on this one. That tells you that all the nodes, all the sites, all the nodes get the same accurate and exact information. So there is no cheating, no magu. Transparency is what you have there. So you can see in the previous site, it says I've received to a total of 22 point something Bitcoin, and I've sent out 20 point something Bitcoin. Exactly, that is what you're seeing. And it tells you that this is 10 out of 270 transactions. As was told to you on the previous site, we have received 270 transactions, and this page contains 10 out of them. And this is the same exact transaction hash that contains the 200 inputs. You can just see the transparency. This is another transaction, 200 inputs. That is 200 transactions are being done per block. So have that at the back of your mind for Bitcoin. 200 transactions are being done per block. And the number of confirmations that this just the number of confirmations that this required to show in my wallet were just 6 confirmations. 6 confirmations, and you are good to go. 6 confirmations. So this is exactly what it is. This is exactly what the blockchain explorer is, and that is how beautiful it is. I hope you all are following. If you've been following up to this time, indicate in the comment section with right on. If you've been following up to this time, indicate in the comment section with right on. If you've been following up to this time, indicate in the comment section with right on. If you've been following up to this time, indicate in the comment section with right on. If you've been following up to this time, indicate in the comment section with right on. If you've been following up to this time, indicate in the comment section with right on. Awesome. I can see your responses. Awesome. 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 I can see your responses. Great, great, great. Everybody is following. Let's proceed then. So this is basically what it is about the blockchain explorer. The blockchain explorer allows you to access all transactions. Okay, let's do something. Let me show you how you can see all the blocks in the blockchain. Okay, let's go to the Bitcoin. Let me use the previous explorer I used before. That's blockchain.com explorer. Now, what are the information you can see on this Bitcoin Explorer? You can see the price of Bitcoin. The current price of Bitcoin is $47,000. The number of transactions that are done in the last 24 hours, you've seen that. So this is like a bank being exposed to you. Instead of decentralization, where the information is only limited to a number of persons, in this case, it is shown to everybody. That is the beauty of it. So instead of it just the information being limited to just a number of persons, in this case, it is available to everyone. So that is a very great application of the blockchain, which everybody needs to explore. So if you've not done that, if you've been doing transactions but you don't know how to access the number of transactions you've been doing, the blockchain explorer is there for you. You can see the number of volume, the transaction volume that has been done in the last 24 hours is about 3.125 million Bitcoin. This is not just 3 Bitcoin, but 3 million Bitcoins. You can see the price, recent blocks, latest blocks. This is blocks, like I told you. Blocks are added every 10 minutes. Look at the blocks, various blocks that are done. Look at the latest transactions. They are always added here. The most recently, look at the keyword. It says the most recently published unconfirmed transaction. You can see that even as I'm here, it's adding up. It's still adding up. These are the unconfirmed ones. This is the mempool, like I talked about. If I want to visit the mempool, you just click on view all transactions. If your transaction is not yet confirmed, you can also view it at the mempool. So these are lots of information which you can get with the blockchain explorer. I do hope this detail is very, very clear. All right. So let's go back to our presentation slide. So move on proper with what we have for today. So if you can see my PPT, indicate in the comment section that I can see it. If you can see my PPT now, indicate in the comment section that I can see it. So let me know if we all are together so we can proceed. If you can see my PPT, indicate in the comment section with I can see it. If you can see my PPT, indicate in the comment section with I can see it. If you can see my PPT, indicate in the comment section with I can see it. All right, cool. I can see your responses. Great, great, great. Let us proceed. Great, great, great. You all are following, and that's good. Now, I mentioned that we are going to look at crypto exchanges. We've done this practical, how to track transactions. Now let's talk about trading. What is trading? What is trading? We keep hearing this thing, trading, trading, trading. What is trading? Now let's talk about it in layman's language. Now, trading simply refers to the buying and selling of assets. That is what it is in basic English. It simply refers to the buying and the selling of assets. Now, when you buy, example is when you buy your groceries as a local shop, that's a trade. When you go to a supermarket to get things, that is just a trade. When you exchange your old PC for a game console or a new PC, it's a trade. Any activity where you give something to someone in return for something else is called a trade. So it is in the same way that you do all these offline trades, that is buying of things at the store, exchanging money for them, you can also trade financial assets like stocks, bonds, forex pairs, cryptocurrencies, etc. This trade is done on exchanges, as we discussed earlier. You can either read it on the SEX or a DEX. I believe you all know the meaning of SEX. To be sure you know the meaning of sex, I want you to indicate in the comment section now, if you attended a class yesterday, what is the full meaning of sex? I'm expecting to see your responses right away. What is the full meaning of sex? CEX. What is the full meaning of sex? CEX. I'm looking at the comment section right now. Awesome. Okay, I've seen some responses. Okay, people are getting it. What is the full meaning of sex? Ensure you type in your response if you know what it is. Awesome, awesome. Centralized exchange. Awesome. You all are getting it. So sex means centralized exchange, while DEX means decentralized exchange. So you can actually trade on a sex or a DEX. And the main thing there you should have to understand is simply that trading is the buying and the selling of assets. In crypto, we call them exchanges. In Forex, we call them brokers. What we are focused on right here is crypto. So we're referring to exchange, not exchangers. I notice a number of persons call it exchangers. It's not exchangers. So how you get started with trading? In this case, we're using a centralized exchange, so things can be easy for everyone. So you have to first of all sign up on Bybit. There is a link in that description. The link to sign up on Bybit is in that description. So it can be clickable. Click on the description of this class. That is the video. Click on the description. You find a link to sign up on Bybit. If you do not have an account created yet, a number of persons have filled a Google registration form for this class, and the link to Bybit is also on that Google form. So if you've created an account, you are good. If you haven't created an account, ensure you sign up on Bybit using that link. Now, you do your KYC, which is know your customer, to get additional privileges. KYC isn't compulsory in some exchanges. It just gives you additional privileges. Now, I will talk about KYC in a different slide so you can fully understand its relevance. Now, you set up your 2FA. 2FA means two-factor authentication. It gives additional security to your account. Additional security to your account. I mentioned yesterday when talking about sex that the best way to, the time you hear that most of these sex are hacked, most people say their accounts are hacked. It's not actually the exchange that get hacked, but it depends on the security precautionary measures of the people using this sex. So if you're using any centralized exchange, ensure you have your 2FA set up. You can set up your 2FA using the Google Authenticator app. There's the OT app. Those are apps that you can use to do your authentication, and some centralized exchanges allows you to do SMS authenticator. Now, what is Google Authenticator or this OT app? What do they do? This gives you a dynamic password. Anytime you want to log in to a centralized exchange, you log in with your email address, you log in with your password. The next stage of it is normally it's meant to open, right? But what happens is that they ask you for an additional password that you get from your Google Authenticator app. Now, that additional password is for your security. That is an additional layer of security. That is why it's called two-factor authentication. So outside entering your email address and password, the second layer before you can access that account requires you enter the 2FA code. So ensure you have this set up. You can't even make a trade on you can't make a trade on Bybit if you don't set it up. It's for your security. So ensure you do that. So once you've done this, that is how you actually get started. So using a crypto exchange, let's talk about using a crypto exchange. What is a market and market pair? But before that, let's talk about KYC. I talked about KYC as one of the things that gives you additional privileges on most of the centralized exchanges that you use. KYC means know your customer. It's a means with which these exchanges get to know you for your own security and to provide, to make sure that things are smooth. Let me give you an instance where KYC comes into full play. Now, take for instance, a kidnap case occurs, and the kidnapper asks you to pay in ransom to the exchange, his wallet address. When crypto goes rampant, we may see cases as that, but we pray that such may not be the case. Now, they may ask you to pay ransom into this exchange account. Now, as you are paying this ransom into this exchange account, you can report to the police or the local authority that this kind of case has happened. That is a fraudulent and a wrong use of crypto. So what happens is that the local authority you've reported to can actually reach out to that exchange that something like that has occurred. What the exchange can now do is, once they verify, they can now provide the identity of these persons. So it helps in providing identity of people who do fraudulent things to relevant authorities to ensure that they are prosecuted and gotten easily. So you see, in that case, you see the relevance of KYC. So KYC is very important on most of the centralized exchanges. And what are the documents to do KYC? The documents to do KYC are basically government approved documents, because every exchange wants to be KYC compliant. They want to do things in such a way that the government of that country is they work hand in hand with them, to see that things are in order and they don't use crypto for illegal purposes. So for such an illegal purpose, they can then push out the details of that person to the relevant government authorities after they've done their thorough checking anyways. They won't just release such info. It's quite rare that they release such info, because they normally do relevant checking and they have their customers' protection at heart. So to do your KYC, you can either use your voter's card, which is the most accepted on most exchanges. You can use your international passport, you can use your driver's license, and you can use your permanent ID card. Most of the exchanges still require the main permanent ID card, not this temporal one. But I think Binance and some exchanges have started integrating the temporal ID card. So you can use that as well. You can try. One thing about KYC is sometimes it gets approved or disapproved at the first attempt. So if you try your KYC and it gets approved, do not stop trying. Keep trying until you get it. It gives you additional, benefits compared to people that don't have KYC. Some of the exchanges allow you to trade without KYC. Some don't allow you to trade with KYC. Some allow you to trade without KYC. Yeah. Now, even as you are able to trade and withdraw, there's a limit attached to it. But with KYC done, you have a higher limit. That's like unlimited, because there's no way you can actually exhaust it. Some of the exchanges allow you to withdraw up to 100 million Bitcoin in a day. Some withdraw allow you up to 100 exactly in a day. It all depends on your KYC level. So get your KYC done, as it gives you more privileges. Now, that is it for KYC. So ensure you have your KYC done. If you've created your Bybit account, log in on the app and try to get your KYC done. I'm going to show you where you are going to do that in a few minutes as I'll practicalize it. Now, using a crypto exchange, what is a market order? What is a market order? What is a market actually? What is a market? When we talk about the crypto market, what is a market? Now, when we talk about a specific market, we mean the place where buyers and sellers come together to trade a certain asset. Understand that there are various markets within one crypto exchange. Let me bring it down in simple words. Now, take a scenario where we have a general market, a market that we buy and sell your commodities normally. Now, there's a section of the market for selling of oranges, selling and buying of oranges. There's another section for selling and buying of clothes. There's another section for selling and buying of phones. When you visit that section of the market, all you see there are people that are selling phones. If you visit this section of the market, all you see here are people that are selling and buying oranges. Each of these things is what we refer to as market within a crypto exchange. So each of these sections of the general market each of them are called markets specifically. And then that thing that they can sell and buy within that specific market is what we call the market pair. Do you understand? Each of these sections in a general market that you visit to buy your commodities We call them markets. Then that thing which you are able to buy in that market is called a market pair. Do you understand? So let's bring it down to crypto. Let's take the market pair BTC USDT. The BTC USDT market pair means that you can buy Bitcoin with your USDT, that is your US dollar, and the same way you can sell your Bitcoin for US dollar. Now, we have various markets within one exchange. We have the stablecoin markets, that is all the USDT markets. We're going to practicalize that so you will see how it looks. We have the stablecoin markets, we have the Bitcoin market. Everything you see there is paired with BTC. You are going to see something like Ethereum slash BTC, Litecoin slash BTC, BNB slash BTC, HT slash BTC. Everything you see slash BTC slash BTC, that is what we refer to as the Bitcoin market. The only thing you can buy and sell there is with Bitcoin. We have the USDT market, that is the stablecoin market. You see Bitcoin slash USDT, Ethereum slash USDT, Litecoin slash USDT. Everything you see there is the what stablecoin market. That's the USDT market. So you can only buy and sell stablecoins there. Then again, we have the you can have the BNB market. Everything is paired with BNB. You have PTC slash BNB, Litecoin slash BNB, everything slash BNB. That is the BNB market. Do you understand? Now, all these markets are contained within one exchange. Is it clear? Now, when you have the Bitcoin market where everything is paired with BTC, everything is paired with BTC in the Bitcoin market, that specific pair, that is what we call the market pair. So we have something like BTC, so we have Ethereum slash BTC. That Ethereum slash BTC is what we call the pair. So when I ask you to visit the Ethereum BTC pair, you should know what I'm talking about. First thing you should do is visit the Bitcoin market. Everything slash BTC, that's the Bitcoin market. Then you can now search for the Ethereum slash BTC market pair from the list of all coins that are in that market. Do you understand? Have this basic knowledge before you go into practicals. Anything slash USDT, all those is the USDT market. So if you're trying to look for a coin in an exchange, what is the first thing you have to do? If you visit the general markets, first thing you have to do is look for that specific market you're looking for. If you have the stablecoin market or the USDT market, look for the USDT market. Then you can now look for that specific pair that you're looking for within that asset, within that market. Do you understand? And like I mentioned before, when we talk about a specific pair like the BTC slash USDT market pair or the BTC slash ETH pair, if we have Nigerian Naira, we'll say the BTC slash Nigerian Naira pair. What does that mean? It means that the BTC slash USDT pair is the market pair for buying and selling Bitcoin in USD Theta. Do you understand? So the market pair BTC slash USDT indicates that if I want to buy Bitcoin, I have to pay with what? USDT. And if I want to sell my Bitcoin, I will be paid in what? USDT. That is exactly what it means. It means you can buy Bitcoin with dollars and you can sell your Bitcoin for dollars. Exchanging dollars to Naira is the easiest part. So that is not even something to worry about. The same thing, the Ethereum slash USDT market pair is the market pair within the stablecoin market, that's the USDT market, where users can buy Ethereum using dollars and at the same time sell their Ethereum and get paid in dollars. Now, this is what I mentioned about the markets. So you can see from this screenshot how it looks. Let me highlight or make this bolder so you can easily get it. So you can see this. This is the Bitcoin market. Everything you are seeing here is what slash BTC. You are seeing Ethereum slash BTC, ICX slash BTC, NEO slash BTC. Everything is slash BTC. So this is the Bitcoin market. Then this is the Ethereum pair in the Bitcoin market. Do you get it? This is the Bitcoin market. Then this is the NEO pair in the Bitcoin market. If I want to visit the Ethereum market, if I click here, everything you are seeing here is going to show slash ETH, slash ETH, slash ETH. This is the Ethereum market, and the specific pairs you are seeing here are the pairs that are in the Ethereum market. We have the BNB market, the USDT market. The most common things you're going to see on most exchanges is the Bitcoin market, Ethereum market, and USDT. Then if they have their own native token, you are going to find their native token pair. Do you understand? The most common markets you are going to see in any exchange you visit at all. Understand what you are seeing here is basic knowledge that can be applied anywhere. Any exchange you are trying to trade on, any centralized exchange, you are going to find the Bitcoin market, you're finding the Ethereum market, and you are finding the USDT market. These are the most common market pairs that you can find. Now, another thing you get to see when you visit a crypto exchange is what we refer to as the charts. Now, this chart is when you visit any market section like this one. If you visit any market section and you click it, example, this neo/BTC that is highlighted. When you click this neo/BTC that is highlighted, you're going to be led to this. This chart is the price history of the assets you want to trade. Let me highlight this so you can see better. So this market pair contains the price history. You can see that the price of this token here is 0.0231 something something. Right here is 0.1. From 0.02 is now up to 0.1. So this thing you see as the chart is not anything complicated, but just the price data. All these markings, we call them candlesticks. We call them what? Candlesticks. And what they represent is the price. Is the what? Is the price. It basically shows you the price of the token. So it's not anything complicated, but it's there to show you the price. You can actually see the price from here. You can see the price around it, but the best place to look at it for more emphasis and to backtest is the chart. Then we have what we call the order book. Now, the order book is where you can actually buy and sell. That is where the actual buying and selling goes through. Do you understand? The order book is where the buy and sell goes through. On the order book, you can see of everything that contains the rates that which the buyers and sellers want to sell, and then you can then place your own order by tapping buy or sell. If I want to buy, I simply click on buy. If I want to sell, I simply click on sell. Now, there are certain information that you see on the order book that most people get confused about, but it's very simple. An instance is this one now. Let me highlight this so you can get it clearly. Looking at this order book, what information can you see here? You can see where they wrote buy at. It means that if I click buy, I'm trying to buy Ethereum. If I have this place called sell, it means that if I click on sell, I am selling Ethereum. Do you understand? Now, this place they call price means the price at which you want to buy Ethereum. If the price at which I want to buy, this is Ethereum/BTC pair, so do not be confused. The price of Ethereum in BTC is 0.1. So the price at which I want to buy Ethereum is where I will write it here. This is the price at which I want to buy. Then the amount, how many Ethereum you want to buy, is 1. We are going to practicalize it so you see how it looks. So when you see price means at what point do you want to buy that thing. Then amount means how many of it do you want to buy. It's just like orange. You go to a market, they tell you a bag of orange is 1,000 naira. That is what price means. What is the current price of that thing? So 1,000 naira is the price of a bag of orange. Then how many bags do you want to buy? You can now write 1 or 2 or 3 or 4 or 5. So obviously you are buying with your balance. This place that has balance, is supposed to show you your balance. This account has 0.1 BTC, for instance. Now, if you decide to use all your money to buy this Ethereum now, you click 100%. This slide you're seeing here is for ease of use. So all these places when you visit exchange, you see 25, 50, 75, and 100. It's just there to make things easier for you. So if I have like say for instance, say I want to buy a bag of orange. A bag of orange is what? 1,000 naira. And I want to buy just one bag. But in my wallet, I have, say for instance, 2,000 naira. And I want to buy just one bag of orange, which is 1,000. What I basically have to do is click on 50%. Because my 100% of my money is 2,000, but what I want to buy is just one bag of the oranges, which is 1,000. So I simply click on 50%. It will now take 1,000 from my balance and buy the orange, and I'll still have 1,000 remaining, and then I will now have one bag of orange. That is exactly what it is. If I click 100%, it means I'm buying what? 2 bags. Same thing applies here. If this person clicks 100%, it means he wants to buy this Ethereum with all his wallet balance. The same way, if you want to sell Ethereum, if you click 100%, it means you want to sell all your Ethereum. If you click 75%, it means you want to sell 75% of your Ethereum. If you click 50%, you want to sell half of your Ethereum. Do you understand? That is the basic difference. We'll come to this much later when we are practicalizing, but get the basic insight, as it is the most important thing. Most important thing. Do not worry about reading the charts. The reading of the charts is not your problem. What the chart does shows you is the price data, previous price data, how much it has gone in the past, so that you can easily see the price, backtrack and see how much it was before. I think I will share, before we proceed, in order to talk about this price. You can see how price of tokens have been moving anyhow, from time inception. I'm going to share a video now. I made this video last year when we had a class as this. So you can see the price of certain tokens that you are seeing now that are shooting sporadically. You're going to see the price of these tokens as at last year. So in a minute's time, I'm going to share this so you can see the price of these tokens, how much they were a year before now. All right, so you can see look, watch this video carefully. You're going to see the price of BNB, price of BTC, and the price of Ethereum as at 1 year ago. And this is one reason I keep telling people that you are never late to crypto. Whenever you get in, jump in. How are you all doing? So right now I'm just going to look through. So this was the price of BNB at the time. BNB was $29, Bitcoin was $19,000, Ethereum was 50, BNB was $29, BTC was $19, and Ethereum was $595. This was exactly 1 year ago, as at December. This day, you can see price of Tron and certain tokens that are making wave today. And as at the time, we had the Nigerian pair, so you can actually trade Bitcoin with Nigerian Naira. So you can see how much Bitcoin was last year. That was about 9 million Naira. I believe if you are good with conversion, Bitcoin is currently 43,000 as at the time of making this video. At the time of making this call, you can actually track how much that is in Nigeria. So this tells you how crypto appreciates. This was $19,000, as you can see on the screen, as at 1 year ago. So this is the beauty of learning crypto and sticking on with it. So I'll present back the slide that contains the PPT, so we can move on. I just had to reply to that question. I think somebody said, how do you understand and read the chart? So I just wanted to use this to make sure you get it clearly. So types of orders. We have various types of orders that you use in the centralized exchanges, and these applies to every exchange, although they may call it a different thing, but they basically mean the same thing. Now we have the major types of orders called limit order. Then there is the market order. Then there is a stop loss order. Then we have another one called OCO, which means one cancels the order, or you can call this conditional. You can also call this a conditional order. Some exchanges call it conditional. We're going to explain it in details. Now, let's talk about the first type of order, a limit order. What is a limit order? A limit order is an order to buy or sell an asset at a specific price called the limit price. Now, let's take an example so you can understand this. So somebody called Dave wants to buy 1 BTC, and the current price of Bitcoin is $50,000. But this guy called Dave, who wants to buy his Bitcoin at a lower rate, he wants to wait. He wants to what? He wants to wait and buy Bitcoin at $45,000. He wants to wait and buy Bitcoin at $45,000. The current price right now is 50,000. Now, instead of waiting for many days and looking at the chart every day, when you wake up today, you now check. Wake up tomorrow, you now check, has Bitcoin fallen or not? Instead of waiting all these days, waiting for Bitcoin price to fall, what this person can simply do is place a buy limit order. That is what limit order does. at $45,000. He places a buy limit order at $45,000 and goes about his business. So any day that Bitcoin drops from $50,000 to 45,000, his buy order would automatically get filled. Do you understand? That is what limit order is. So you can get to buy Bitcoin at a lower rate. But understand that the limit order means that whenever that thing happens, then your order gets executed. So right now, the Bitcoin is 43,000. If I want to buy Bitcoin at 40,000, I'm not sure whether Bitcoin will ever get to 40,000. But what I am sure is I just want to buy Bitcoin at 40,000. I don't want to buy it at 43,000. What I can basically do is, instead of waiting for many days to then buy Bitcoin at 40,000, I can decide to just set a limit order. Whenever Bitcoin gets to 40,000, instantly my order gets what? Executed. Do you understand? The same thing applies to selling. If I want to sell Bitcoin right now Bitcoin is 43,000, if I'm not mistaken. Bitcoin is 43,000. Now, if I want to sell this Bitcoin at a higher rate, what do I do? If I want to sell Bitcoin at, say, $50,000, if I want to sell Bitcoin at $50,000, how is it going to be possible? Do I have to keep waiting until Bitcoin gets to 50,000? No, I can simply set an order at $50,000. So whenever Bitcoin gets to $50,000, instantly my order gets executed. Now, understand that for a limit order to go through, that thing that you've set, that condition must occur. So if Bitcoin never gets to $50,000, my order remains there. If it happens in the next 10 years, it takes 10 years time for Bitcoin to get to $50,000, my order must still get executed. That is the beauty of limit order. Once you set a limit order, it is certain that that thing must happen. It must trigger once the condition occurs. So a limit order is what you can use to set a higher profit, set a higher target of selling. If you are the one that wants to sell any crypto, but you don't want to wait and be there watching your screen every day to know the right time to sell, set it at a high price and leave it there. Whenever the price gets to that level, it's going to be executed and you make cool money. The same way, if you want to buy crypto at a lower rate, you can use a limit order to set the price you want to buy that crypto at. So whenever it gets there, your order is going to be executed. Do you understand? Okay, let's proceed. Now let's talk about market order. A market order is an order to buy or sell at an asset at the best current available price. This one is executing it right now. That's why it's called a market order. It executes it immediately. It executes it what? Immediately. So if the current price of Bitcoin, is $50,000 now, using a market order means you want to buy it right now. You don't want to wait. It's not like limit order. With limit order, you can wait for days. Once you set the order, you can go about your business. So now, whenever price gets to that thing, you can then decide to buy or sell at that. It can sell or buy at that price. But with market order, you are buying it right now. So say you want to buy Bitcoin right now, and Bitcoin is 43,000. If you use market order, you buy Bitcoin with your USDT immediately. That is what market order is. So an example, say Chris wants to buy one BTC immediately or urgently, which is right now, and doesn't want to wait for price to drop. He can simply place this special type of order called a market order, that is for buy, obviously, and the BTC will be bought instantly. His buy order will get filled automatically. That is, it doesn't waste time. This same procedure applies to selling of coins at the best currently available price in the market. So say you bought a coin and the coin has risen and you want to sell, you don't want to waste time. You've seen a good price that you like. Using a market order is what you use to sell that coin instantly at that price you're seeing right there on your dashboard. Do you understand? So with limit order, you can sell at a lower rate, it's at a higher rate, than the currently available price. That is, whenever price gets to that level you set, or you can buy at a lower rate than the current available price. That is, whenever price gets to that level you've set. But with the market order, you can then decide to buy and sell instantly. Is it clear? If you've understood what I mentioned about limit order and market order, reply in the comment section with "I understand." Please write on. If you've understood up till this time what I've explained about limit and market order, reply in the comment section with "I understand." Please write on. I'm looking at the comment section now. If you understood all I've explained now about limit and market order, Reply in the comment section with I understand. Please ride on. If you've understood all I've said so far, indicate in the comment section with I understand. Please ride on. Awesome, awesome. I can see many people on this that are indicating. That shows that you all are following. If you've listened to everything explained about limit and market order and you understand it, reply in the comment section with I understand. Please write on. Awesome, awesome, awesome. I can see the everyone I can see everyone answering. That is good. Time for questions will come, okay? Time for questions will come. I'll take your questions in due time. Now let us proceed. I can see some questions, but we'll take the questions in due time. Let's proceed. Now, we have another type of order called the stop loss order. What is stop loss order? Let me explain it in layman's language. If you recall what I told you about limit order, the limit order, you can use it to buy at a lower rate, use it also to sell at a higher rate. That is if price eventually gets there. If price never gets to that level you set, the order just remains there until the condition is met. So say I've set the price to buy my Bitcoin at $40,000. If Bitcoin moves from 43 that it is right now and goes higher, 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 it never gets to 40, my order remains there until whenever Bitcoin gets to 40, it then executes. So have that at the back of your mind. So the same thing applies to selling. If you set a very high price and price never gets there, your order is not going to be filled until price reaches that level. For market order, you are buying and selling instantly at the current available market price, the best market price. Now, this one called stop loss order. Let's reason it this way. Now, say I buy a coin at $50. I buy this coin at $50. Now I want to sell this coin at $60 to make how much profit? That is okay. Let me ask that other question. If you buy a coin at $50 and you intend to sell that coin at $60, how much profit do you intend making? Let me be sure we are following. If you buy a coin at $50 and you intend selling it at $60, how much profit is that? I'm looking at the comment section. If you buy a coin at $50 and you intend selling that coin at $60, how much profit is that? Awesome, awesome, awesome. I can see your responses. $10. That is correct. That is correct. You all are following. So if you buy a coin at $50 and you are intend to sell it at $60, but the unfortunate happens that the price of that coin keeps falling. Now, this coin has fallen to, say, for instance, from that $50 you bought it, this coin now falls to $40. You are on loss of $10. From buying it at 50 to it being at 40, you are on loss of $10 currently. Now, one good thing about stop loss is that it helps you to limit your losses. Now, imagine that coin keeps falling from $40 and the coin falls all the way down to $10, making you lose a whole $40. What is the best way to prevent this? That is where stop loss orders come in. So this stop loss order, with the stop loss order, it helps you to minimize your loss. You're already on loss, but it helps you to minimize it even further. Do you understand? So say I'm in loss of $10. That is, the coin is now at $40 from 50. I can place a stop loss order that if this thing falls again from 50, it went to 40. If the thing falls again to around 35, it should sell off for me. I'm selling on loss, but it's with wisdom that the thing, if it keeps falling and falling and goes down to something like $5, I have lost 45 from 50. So with the stop loss order, you are limiting your losses. Do you understand? You are making losses, but it's limiting your losses. So instead of the price or the loss to be so huge, you are using stop loss to limit your losses. That is what stop loss order is. Obviously, you don't set your stop loss order, so close to the price you bought that coin, because obviously price can just drop anytime. Immediately you buy a coin, you notice most times it goes to red immediately. Immediately you buy a coin at 50, you can see it going down to 49. So you don't set your stop loss order something like from 50 you bought, you now set your stop loss order at 49 or 48. Obviously it's going to sell at 49 and you're on loss, because the market is very volatile. It can come down from 50 to 49 at any time, very, very easily and very fast. So you set your stop loss order quite a bit away from that your entry. Nobody wants to sell on loss. Have that at the back of your mind. There is nobody on this earth that wants to sell crypto on loss. What do you do with stop loss order? It helps you minimize your losses, not obviously to be creating losses for you. So when you're setting your stop loss order, you have to shift it a bit away from your entry point, so that whenever price meets all the conditions you've set, because before you buy any token, you've done your analysis, especially if you're a features trader or you are even trading spot. You can use stop loss order in spot as well. You've done your analysis to know that this coin will rise. So this stop loss order happens that it helps you minimize your losses when the conditions you've seen before going into that trade were invalidated. So you set your stop loss order, for instance, you bought at 50, you now set your stop loss order at 45. So you mean that anytime this coin falls and falls and falls and goes to 45, your mind have already told you that this coin will keep falling from 45. So with that stop loss order, immediately it gets to 45, sell for me. So that instead of it to keep falling all the way from 45, starts falling, just sell at 45 for me. That is what that stop loss order does. Now, the stop loss order of two types. You can have a stop limit order or you have a stop market order. Do you understand? There are two types. It's this stop loss order just takes the two types of orders together. We have the normal, limit order, and we have the normal market order. I've told you already how they operate. Now, the stop loss order can be of two types. We have the stop limit, and then we have the stop market order. Now, this is only activated when a certain price is reached. Obviously, like I told you, if you bought at 50, there is something called the stop price or that trigger price. There is the stop price or the trigger price. That's the level that it should reach, then sell for me. That is what we call stop price. Make sure you are writing it down and make sure you are taking notes. That is the best way to learn if you are attending this class. Make sure you are taking notes so you can, go over it again. There is something called the stop price. Let me highlight it for you. The stop price. There is something called the stop price. What this stop price is that level that when it reaches, it should activate it for you. That is the buying or the selling. You bought at 50. You are saying that if this thing gets to 45, sell. That is referred to as your stop price. That 45 is your stop price. Now, there are two things that can happen. That is where we now talk about stop limit or stop market. Stop loss order are of two types. You can have this. Let me highlight it. Oh boy. You can have the stop limit or the stop market. You can have the stop limit or the stop market order. So first of all, you must have your stop price in mind. So when it now gets to that stop price, one out of two things should happen. That is the meaning of limit and market. Now, let me explain so you can get it. I already told you what market is. Market means sell immediately, while limit means if this happens, do this. If this happens, do this. That's the meaning of limits. Now, let's apply it to stop loss so you can get it clearly. You bought at 50. This thing now fell to 45. 45 is your stop price. Now, you are saying something now. You are saying that if this thing gets to 45, sell immediately. That is where you use what? Stop market order. If you want to sell immediately, it gets to that your trigger price, that your stop price. We call it what? Stop market. Then the next one is stop limits. With stop limits, you are saying if it gets to that your stop or trigger price, when it gets to that 45, then sell at this other price. Because you are saying when it gets to 45, you are not yet sure. You feel like when this thing falls to 45 now and you sell, the thing will start rising again. So your mind, you're having double mind. You have double mind. When this thing falls to 45, it could happen that immediately I sell this thing at 45 instead of using stop limit, instead of using stop market. If I use stop market and sell this thing at 45, there's possibility that immediately this thing will start rising again. So what do? You can decide to set that 45 as your stop price, then your own main selling price will now be 42. So that means it falls to 45. Then if it keep falling again, now fall from 45, fall to 44, fall to 43, then falls to 42, sell. Because at that 42, you are sure that if it pass that 42, it keep falling down. So that 45 is what we refer to as your stop price. Then 42 is now your what? Your stop limit price. So you can use stop loss order in two ways. Let me re-say it again so you can get it clearly. Stop loss order are of two types. Some exchanges use stop limit, some use stop market, and some allow you to choose any one you want to use. So we can have the stop market order, and then we can have the stop limit order. What is market order normally? No, market order means sell at the available price, sell at the current price. While limit order means sell at a higher or buy at a lower, that kind of thing. Now, applying it to stop loss, when we talk about stop market order, it means that you've set your trigger price, that's your stop price. If you keep falling and fall to this level, sell immediately, that's the stop market, sell immediately at the market price. Then if you use stop limit order, it means that the price now reaches that your stop price, which is your trigger price. If it reaches there, you are not yet sure that you are saying this thing may keep rising. So you then decide to, choose a lower amount than your actual, stop price, so that when it reaches that stop price and keeps falling to that now your stop limit price, let it now sell. Do you understand? So the purpose of stop loss order, like I said, is mainly to limit losses. Every trade needs to have an invalidation point. That is a price level you should define in advance. When we talk about invalidation point, it means either in profit or loss. Before you go into any trade, that's one thing people will have mistakes on. They don't have a target when making trade. Two things can happen when you are making a trade in crypto. Is either you make profits or you make loss. So you have to define it beforehand. You have to define how much profits you want to make in this trade. You have to define how much money you are ready to lose in this trade. These are two things that you have to have at the back of your mind when making any trade. First, how much do I want to make? Second, how much do I want to lose? So there are two invalidation points. It's either validation or invalidation. Validation means when it goes your way, which is profit. Invalidation means when it goes on loss. So if it's going on profit, you define it, and if it's going on loss, you have to also define it. So the most important for us using stop loss order is the invalidation point, which is the price level you have to define in advance. This invalidation point is the level where you say that your initial idea was wrong, meaning you should exit the market immediately to prevent further losses. So the invalidation point is where you typically place your stop loss order. Do you understand? So think of a sell limit order as strictly selling for profit. So if you want to sell for a higher price, that is, if you want to take profit, I already told you what limit price is. So say you buy at 50, you want to sell at 60. You use what? You simply use a limit order normally. You use a sell limit order to take profit, higher rate. So think of a sell limit order as strictly for selling for profit after getting a coin. Then use a sell stop limit order as an order to minimize your losses and sell at minimal loss if the price crashes from your entry point. Do you understand? Let's look at an example to get this clearly again. For instance, Steve bought Litecoin. Let me use another example so you can get this concept clearly. Steve bought Litecoin at $250. The price went up and it is now trading at 270. He bought this stuff at 250, right? The thing is now trading for 270. Now this guy Steve wants to sell once the price reaches 300. From buying at 250 to 270 to 300, he has already defined his profit level in his mind. He's saying that once this price gets to 300, he wants to sell, making what? A $50 profit. Now this thing is already in profit. Have it at the back of your mind. This thing is already in profit. He bought at 250. It's already in profit. He bought at 250. He's already at 270 in profit. But he has a target to sell at $50, at $300 when he makes a $50 profit. Now, what if as this guy goes offline, the market now reverses? Instead of that profit that he is on, it now dips from that $270 current price he saw when it was online. It now dips below his entry price of $250, now putting him on loss. What can Steve do such that even if he's not online, if the market now starts dipping from 270, dips to 250 where he bought, now keeps dipping further, going further, what can he do such that even if he's not online, it should sell for him at a specific level? So Steve can set a stop loss order. That is what I'm trying to say. Steve can set a stop loss order to sell off his coins at minimal loss at a certain price level, even when he's not online. This would limit his losses from becoming what? Worse. So the stop loss order can be of two types. It can be a limit stop loss order, or it can be a market stop loss order. Now, what is the difference? With a limit stop loss order, as I've mentioned before, understand limit stop loss order. Steve can set the specific price he wants to sell off at once it has been triggered. Remember what I talked about? Trigger price is called the what? Stop price. So once that thing has been triggered, he can now set a different price he now wants to sell at. So it now falls to this trigger price and then sell for me at this different rate. So that is once price gets to or below 240. Now let's take for instance, he now puts his trigger price at 240. He bought at 250. Now he put his trigger or stop price at 240. He's now saying that once price gets to or it goes below 240, it should sell off for him at 235. That is, it dips from 240 to 239, 238, or down to 235. So once it dips to 235, that is now his own limit price. So if it drops and reaches that price, sell for me. Do you understand? That is the meaning of limit stop loss order, or stop limit order. Stop limit order. Anyway you call it, it's still the same thing. So with limit stop loss order, you set your trigger price and then a different price which you want to sell at, because you've analyzed the market and know your invalidation point. Now let's talk about a market stop loss order or a stop market order. With a market stop loss order, it sells off at the best available price in the market once it has been triggered. So remember, his trigger point is 240. So once price gets to or below 240, it should sell off at the next best available price in the market, like a normal market order. Do you understand now? Do you understand the two types of stop loss order? Is it very clear? Indicate in the comment section that you understand the two types of stop loss orders. Let me know if it is clear. Do you understand the two types of stop loss order? I've taken time to explain this carefully because I notice most people still confuse this concept till today. Indicate in the comment section if it is clear. Indicate in the comment section if it is clear. Indicate in the comment section if it is clear the two types of stop loss order. Indicate in the comment section if it is clear. I need to see everybody's response to be sure that you all are following. The two types of stop loss order, indicate in the comment section if it is clear. This is the basic concept. You get to understand it better when it's practical. What I just want to understand is if you got the basic concept. If you got the basic concept, is the basic concept clear? If you got the idea, that is fine. That is the best thing. You can only get it very well when you actually practicalize it, and we are going to do that soon. But the basic concept is what I want to get. Did you get the basic concept of limit and stop loss order in relation to limit and market order in relation to stop loss order? Okay, I can see the responses. Some are saying not too clear, that they have the idea. Perfect. That is good. That is still fine. It's a process. You can't learn everything at once. Good. I can see everybody's response that it is clear. Very good. When you practicalize, you are going to get the concept very much better than how fuzzy it is. Good. The concept is the major thing that you understand the difference between limit and market, then you are now applied to stop loss order. You now have the stop limit and then the stop market order. Do you understand? Okay, let's proceed. I've seen enough responses. Now, the other type of order, this one is not in every exchange. The most common types of orders that you find in various exchanges are limit order, market order, and then the stop loss order. They will not call it stop loss order. Most exchanges just call it stop limits. Some call it stop market. So any exchange you are using, you can actually view to know the type they are using. For instance, Binance uses the stop limit order. That means you set your trigger price and then you set a different price which you now want to take your stop loss at. They don't have stop market, I think, for the last from the last time I used it. But most exchanges upgrade as time goes on, so it could have been added or it's still not yet there. But some exchanges allow you to choose anyone you want to use. You can either choose the stop market or the stop limit order by yourself, while by default it's just market, limit, stop loss. The stop loss is of two types. Like I said, the exchange can choose to give you stop market or stop limit, and some exchanges give you the option to select your preferred one. That is the most three common types of orders that we have. Do you understand? Now, what is the next type of order? What is the next type of order? This is not so common on various exchanges. It's called OCO, meaning one cancels the order. They also call it conditional order. Let me edit this. OCO order or conditional. Now, what is this OCO? OCO means one cancels the order. Have the meaning at the back of your mind. One cancels the order. OCO is a combination of two order types at once. OCO is a combination of two order types at once. It combines a limit order and then a stop limit order. Do you understand? It combines limit order and stop limit order. I already explained what limit order is. If you understand what limit order is, perfect. I already explained what stop loss order is. And then in stop loss, I talked about stop limit order as one of the type of stop loss. If you already understand what stop loss order, stop limit order is, perfect. You already understand what OCO is. I will explain further. Now, why we call it OCO, one cancels the order. Now, let's look at it like this. Think of it like two friends invited you for a party. You have not decided on which one to attend. And one thing is, you cannot be at both places because of physical limitation. So this means that once you accept you accept one invite, you accept to attend one event, you are automatically declining the order. Mr. A invites you for a birthday party. Mr. B invites you for a wedding at the same time, Saturday, 9 o'clock a.m. If you accept Mr. A's invite, you have automatically cancelled Mr. B's invite. If you accept Mr. B's invite, you've automatically cancelled Mr. A's invite. That is the meaning of OCO. One cancels the order. If one condition happens, the next one is getting cancelled. If the other one happens, the first one is getting cancelled. This is one cancelling the order. Do you understand? This is exactly how OCO order works. Let's look at an example so you can get it. Remember, it's the concept that I want you to get. Get the concept. Application can only be well understood when you practice it in real time. We're going to practice this in real time. If not today, tomorrow, we're going to dedicate it for practicals. And on the WhatsApp group, I hope you all are in the WhatsApp group. We're going to practice in real time there as well. So understand the concept. That is the most important thing. When you now visit to practicalize, you can come back to this video, rewatch this video, ensure you rewatch this video as some of the things are new. Ensure you rewatch them to fully understand. That is when you fully get some of your questions cleared. As you practicalize, rewatch this video. Very, very important, so that you can actually get the full concept as you're listening to the explanations. Now, let's look at an example to explain OCO. Like I said, it means two things at once. And the two types of orders are what? Limit order and stop limit order. I told you that limit order is an order. You can use it to take profits. That is to sell at a higher price. The limit order is anything that is not the current market price. So if you are selling at a higher price, you are setting a limit order. If you are buying at a lower price, you are setting a limit order. Then when we talk about stop limit order, it means you are taking stop loss. Stop loss means your trade, if it happens to go on loss, what should happen? How much should you lose? How much do you want to lose if this trade goes on loss? So if this trade goes on loss, how much should you lose? That is the meaning of stop limit order. So if this trade goes on loss, you are setting your trigger price first, then you now set your limit price where you want it to sell at for you on loss. Now let's look at an example. For example, Anna bought BNB at 350. Let's use a lady, Anna. She bought BNB at $350. Now, the price of BNB dipped from 350 that she bought it, and it is now trading for 340. Now, this girl Anna has two plans. This girl Anna has two plans. What are the two plans that Anna has? What are the two plans that Anna has? What are the two plans that Anna has? She has two plans. One of the plans is that she wants to sell once the price goes beyond her entry point to 400, making a $50 profit. She bought at 350. She wants to sell at 400, making a $50 profit. I saw somebody asking, is there a take profit order? Take profit is limit order. You use a limit order. You bought at 350. You now set your take profit order. Take profit means you set a limit order immediately to sell at 350. So whenever price gets to 400, rather, whenever price gets to 400, it sells for you. That is take profit. Simple as ABC. So Anna has two plans. She wants to sell at a higher price, that is at 400. Right now, the price is deep, She bought at 350. The coin has fallen to 400, to 340. She bought at 350. The price has fallen to what? To 340. What can Anna do? She has two plans. She is saying she knows that this thing can rise from this 340 that it has fallen to 400, where she wants to, is that where is her take profit, making a $50 profit. So also the second plan is that if this thing continues falling from 340, it now falls to 330. It tells her that this coin will keep falling further, and she wants to cut her losses. So she says that if the price should fall to 330, she wants to sell it off to limit her losses to about $20 only. That is from 350 to 330. That is $20, isn't it? If you minus 350 and 330, you're going to get $20. So she bought at 350. She has two plans. One, to make a $50 profit. When the coin gets to $400, she wants to set a take profit order. That is, she set a limit order to sell at 400. Then her second plan is that as this thing is falling from 350 to 340, is she saying if this thing falls further to 330, she wants to sell it with a $20 loss at that 330. Now, she wants to do either of these two things at the same time. Do you understand? This OCO gives you more functionality. Remember, before you can only set take profit. That's using limit order. You can only set take profit normally. So if she sets it that she wants to sell at 400, well, if the price keeps falling, what happens? If it never reaches 400, your money goes for vanishing, because the price will keep falling and falling. It now even falls to $1. You've lost all the money. The $400 you set, it still remains there, but it's never executed. You can never sell at that price because the price keeps falling. So that's why you need to have two plans. OCO order gives you the ability to set two plans. So anyone that happens first is what is going to be. So she has two plans. One is to sell at 400. Her second plan is to sell at 330 if this thing keeps falling from 340 now. It now falls to 330. She wants to sell at 330, making a $20 loss. Normally, like I said, you can only set take profit or you set stop loss using stop loss, stop limit order. But with OCO, it now combines the two of them together. It now combines the limit order for you together with the stop limit order. Do you understand? So she wants to do either of these two things at the same time. So what can she do? She can set an OCO order, as it allows you to do these two things at the same order. It allows you to do these two things at the same time. That is the beauty of OCO. So the first part of the OCO is a sell limit order. That is a normal limit order, just a sell limit order in order to sell at a higher price. That's take profit. She wants to sell at a higher price and take profit. So the order gets executed if the price reaches 400. So she will just set a limit order at $400. So whenever the price gets to $400, it's going to be executed. Then the second part of the OCO order is a sell limit stop loss order. Remember, a sell limit stop loss order. It can be a sell market or sell limit, but as at the time of writing this, sell limit was what was used by the exchange. Now, the sell limit stop loss order is what you find on Binance. The stop loss order you find there is only sell limits. That is why in this article I'm using sell limits. Now, the second part of our OCO order or the conditional order is a sell limit stop loss order. In this case, she can set it to trigger at 335, then set her limit price at 330. Do you understand? Remember, she just wants to lose only $20 on this trade. So from 350 to 330, that is $20. So whenever price gets to 330, sell. But there has to be a trigger price or your stop price normally. There has to be a stop price. That is a trigger price. So the trigger price is not the price you are selling at, obviously. You want it to trigger, then if it keeps falling and falling and falling, see that price you want it to sell at, let it now sell. So from 350, she now sets her trigger price at 335. So if this thing keeps falling from 335, now fall to 333, from 335, it now falls to 334, to 332, it now falls all the way down to 330. Let it now sell finally. Do you understand? It's just the same stop loss that I've explained before, the sell limit type of it. So she can do any of these two things using an OCO. The first part of the OCO is a limit order. That is a sell limit order to sell at a higher price, which is 400. Then the second part of the OCO is a stop loss order, a sell limit order. In this case, she will set her sell limit order in that stop loss to sell at 330. Then her limit price or her trigger price will be 335. So if it gets to 335, trigger, tell this thing that I want to sell you. That's the meaning of trigger or stop price. So if she sets her trigger price at 335, if it gets to 335, trigger and say sell at 330 if it keeps falling. If it keeps falling and gets to 330, it now sells. Do you understand? That is, if the price goes to or below 335, which is our trigger or stop price, it should sell off at 330, limiting her losses from the entry to just $30. Now, what makes it OCO is that if any one of these two orders gets executed, the other one gets cancelled, as there will be nothing to sell again. Remember, she just has one thing to sell. That's the coin she has bought, which is BNB. So if the first condition happens that the price keeps rising from 350 that she bought, it rises to 360, 370, 380, rises to 400. That's the first condition that has been met, which is the limit order. They take profit. She takes profit at 400. She makes cool cash from 350 to 400, $50 profit. That's the first condition that has been met. If it happens that the first condition that is met is the second one, which is the stop loss order, that's the stop limit, it now sells for her on loss at $330. That condition has been met and there is nothing again to sell. So that is why it's OCO. It's just this is the best type of order that the crypto market has provided, but many people don't use it because they don't understand it, and it's very, very easy, to use. It allows you to set your take profit and your stop loss at the same time. So anyone that gets executed first cancels the order. That's the meaning of OCO. Is it clear? The concept is what is most important to me. Do you understand the concept of OCO now that combines two other types? That if anyone gets executed first, the second one gets cancelled. The concept is what I want you to understand. Is the concept very clear? Indicate in the comment section ASAP. Indicate in the comment section if the concept is very clear. I want to see everybody indicating the comment section. Okay, I'm seeing some responses. Okay, very good. Awesome. Indicate in the comment section if the concept of OCA order or this conditional order is clear. Indicate in the comment section. I want to see persons indicating if this is clear or not. Great, 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 great. Everybody's saying it's clear. All right, let's proceed. Let's proceed. So the concept of OCO, I believe, is clear now, and everybody understands it. You can understand it better when you practicalize, but it's best to get the knowledge. Get the knowledge is the most important thing. When you get a clear understanding of the knowledge, when you are practicalizing, or when you come back to watch this video the second and third time, you get to find out that whatever thing you are learning, whatever thing you are trying to understand, it's so easy for you once you understand the basic concept. Now, let us proceed. So we've covered the various types of orders you find on exchange. We've talked about limit order. We've talked about market order. We've now talked about stop loss order, which takes two types. You can have the stop limit order or the stop market order. We've also talked about OCO, which combines the limit order and then the stop loss order, which can be either the stop market or the stop limits. Now let's proceed to trading styles. Let's proceed to trading styles. Now, there are various trading styles that traders use in trading crypto. What are the trading styles? I think, okay, no problem. Let's talk about this today. So, the various trading styles that traders use in trading crypto are: we have day trading, we have scalping, and then we have swing trading. We look at it quickly, and we don't have much time. I think this will be the last we discuss. Then we'll do the practical for tomorrow. Now, day trading involves entering and exiting position within the same day. That's the simple meaning of what it is. Day trading means you enter and you exit a position within the same day. Now, in day trading, people often rely on technical analysis, that is TA, to determine which assets to trade. Once you buy and sell an asset within the same day, you are a day trader. Have that at the back of your mind. That is what day trading is. Now, the other one is scalping. Scalping takes place across the smallest time frames. So scalpers attempt to gain or take profits on small fluctuations in price. If something you see like Bitcoin do it does plus 5%. People buy and sell in that from 0 to plus 5%. That is what you are, a scalper. Scalpers make lots of trade in short period of time. That is what scalping is. The next one is swing trading. Swing trading takes larger time horizons. Positions are held when you have an order on. What we refer to it as is a position. So positions are held anywhere from a couple of days. Take note of these keywords. Positions are held anywhere from a couple of days to a couple of months. Do you understand? Fittingly, the goal is to profit from larger swings in price. That is the meaning of swing trading. The positions are held from a couple of days to a couple of months. So if you're the type that some of you are actually doing this unconsciously without really knowing what it is. So if you are always buying and selling within the same day, you are a day trader. If you are trading futures, and you are scalping, you buy and sell assets, immediately you buy, you sell, you buy, you sell, you buy. So within the same day anyway, you are a scalper. Then if you buy and hold, you observe the trend. Remember, we are looking at the trend. We all know when there is an uptrend, you know when there is a downtrend. So if you are the type that observe the trend and holds it for a very longer time, that is a couple of days, weeks, or even months, what you are doing is called swing trading. So these are the basic and the major types of trading styles. We've got the day trading, we've got the scalping, and then we've got the swing trading. Do you understand? I want you to indicate in the comment section now what type of trading styles from what I've explained, all you've been doing. If you've been trading crypto before now, what type of trading styles have you been using? I understand that some of you don't really know the styles you've been using, but from what I've said, you can match what you've been doing to what I've just said. What type of trading styles have you been doing frequently? I tend to even do all the trading styles. What type of trading styles have you been doing before? Have you been doing scalping? Have you been doing day trading? Have you been doing swing trading? From what I've explained, you can be able to figure out what you've been doing for a long time now. Awesome. Okay, a lot of persons are saying they've been swing trading. Okay, that makes sense. Swing trading, I can see lots of persons are saying they are swing trading. Okay, that makes sense. Okay, and I think with this, we've come to an end of today's session, so we wouldn't spend much time. When we come back tomorrow, we are going to look at practical session. Now, what I want you to do for me, we're going to do practical on spot P2P trading. So if you can, make sure you do your deposit on your Bybit account. Remember, the requirement for you to be part of this class is that you deposit at least $10 to trade. You are not being charged for this class. Normally, the price for this course is around $250 to $300, but we are making it free this December to ensure that everybody gets crypto knowledge for free. The requirement is that you deposit at least $10 to trade. You must have at least $10 to trade, and I believe everybody that is part of this class actually met that requirement. So if you can, ensure you make your deposit before tomorrow. So while practicing it tomorrow, as you're seeing it on the screen, you can as well practicalize. Then the next day, we're going to do the main practical in the WhatsApp group. If you are not in the WhatsApp group, try to get yourself there. If you are not in our Telegram channel, ensure you get yourself into the Telegram channel. Now we'll take some question and answers. Remember, at the end of this class, ensure you try to give us a good review if you learned something, and what we've explained is quite very clear. Ensure you join our Facebook group and you follow us on Twitter at official_GIDA. You can follow me especially on Twitter at Kevin Chiboyim. You can find me on Facebook at Okoye Kevin Chiboyim by searching that. Ensure you join our Telegram group. The link is in the description of this video, and join our Facebook group as well, so you can learn about crypto. As you know, we discuss a lot of issues there. So I'll be taking just 2 to 3 questions before we end the call, and ensure that after this call you come back and rewatch it until you understand. Is that clear? So I'll be taking 2 to 3 questions now, and if there is any question, do please ask it now. Okay, somebody said, how do I fund my Bybit? If you don't understand how to fund your Bybit, you can wait until tomorrow. If you are an existing crypto trader, ensure you you fund it. Can you cancel a limit order? Yes, you can cancel a limit order. You can cancel your limit order at any time. If you set a limit order, like I said, it takes time for it to be executed. Price must get to that level. Before it executes. Do you understand? So if price gets to that level, it executes. If it doesn't get there, it can always be there. The order is always there open, so you can cancel it at any time. Somebody says, speaking about stop loss order, what if it rises and falls again? Understand, stop loss order is meant to close your order. Stop loss order is not anything different. It's just selling. When you buy an asset and you sell it, there's no way you can sell it second time, isn't it? You can't sell a second time after you've already sold. So the stop loss order simply sells for you at loss. So once the order is executed and price keeps rising again, you have no business with that until you buy again. So I think at this point, we've come to the end of this session, and I thank you all for staying, and ensure you go through the video recording again to fully understand. Tomorrow, we're going to practicalize, and ensure you are in all the WhatsApp groups to be sure that you can also follow up. So do have a lovely evening, everyone, and see you all.